Hello, everyone. I am Allie Wolf, Zonda's chief economist, here to go through the February Builder Update. Now, before we do, I want to acknowledge the events that are happening in Ukraine. Our thoughts and prayers go out to those people involved. It is this awful humanitarian crisis that we are living through today. But we also know these kind of humanitarian crises have the ability to impact things wider than what's happening on the ground. In particular, looking at what's happening here domestically with the stock market, with the economy, with the housing market. And so I'll hit on some of those in today's presentation, but we want to acknowledge that the backdrop is really these awful events that are occurring. Now, what we know so far is that February was a fantastic month for the housing market. When you look at the data, 92% of builders reported that sales were either stronger or exceeded their expectations. Now, many of you know I like to assign a word or a phrase to the housing market. For February, I would say the market was one where there was enthusiasm. Enthusiasm around builders with the demand, enthusiasm for buyers wanting to buy a home in today's spring selling season, but also panic. That panic, especially related to what we saw with mortgage rates, where this time last year we were talking 2.7% mortgage rates, and today we were talking 4%. Now, interest rates have likely come down since then because of the impact on the treasury market as investors look for a flight to safety. So some of those headwinds that started to face us in February may have come down a little bit. But we know that interest rates and the sensitivity to interest rates are very important to track. So 92% saying on track or exceeded, and then you look at it more, and we know that 46% of builders said that their sales were flat month over month, 38% saying their sales were higher. As we look at this data, remember, sales only tells you part of the story because sales right now are being influenced by the fact that homes are selling out quicker than they can be replaced. So overall inventory levels are down, and by the fact that still 92% of builders are intentionally slowing their sales. They're saying we could sell a lot more homes, but we don't have enough workers and we don't have enough supplies to make that actually work, to sell more homes. So we need to slow to match with production capacity. 92% capping sales, 97% raising price increases. New home price increases are seen across the board. It matches what we're seeing on the existing home side, that there continues to be these very high levels of home price appreciation. For the new home side, part of it is, of course, the supply and demand imbalance, but a lot of it comes down to the building material costs are going up, and as it costs more money to build the homes, builders are pricing those homes higher. Comments. I think some of the builders were realistic in the comments, acknowledging that at some point, all of this is going to add up and impact the buyers. But that some point doesn't seem to be here today. This is a question we've asked since the beginning of the pandemic. We said, hey, interest rates historically low, price appreciation crazy high. What kind of challenges are you running into? Only 24% of builders right now are reporting that they're seeing buyers not being able to get qualified. Now, I say only 24% because when you look at some of these months that we've been asking the same question, this is not an abnormally high number. This is a number I'm going to watch very closely, but we're not seeing this impact buyer quality just yet. Also, look at that buyer hesitancy. Last month, I talked about how we went from 60% at the peak to 26% last month to 36% this month. I think buyers really don't know what to think in this kind of dynamic market. Prices are up, interest rates going up, going down, inventory tight. There are so many moving parts that make this market pretty confusing. But a key number to watch, this is a number I haven't presented on in these updates, is this idea of cancellations. Are people saying, I'm fundamentally concerned, or I don't think the payment is justified anymore because of how much either prices or interest rates have gone up? You would see those kind of questions show up in the cancellation rate. Right now, only 11% of builders reported an increase in cancellations compared to last month. I say only Again, because this is not a high percent compared to what we've seen as we've tracked this since the beginning of the pandemic. Now, supply chain. Building material costs, building material availability continue to be the biggest constraints on the market. Those higher mortgage rates, we're concerned. Again, we'll watch how much they've come down as a result of the changing 10-year Treasury yield. But we know that inflation is a concern. We know land prices are a concern. There still are a lot of issues in the housing market that we need to try to resolve. Again, to finish off though, we know there's enthusiasm, we know there's panic, but there's also a lot of things to watch. And that's why we at Zonda will continue to be doing these updates on YouTube, but also the first quarter housing outlook. We have that coming up this week. Tim Sullivan and I have our COVID webinar later this month. Please join us. And if you'd like to learn more, go to zondahome.com. Thank you.